as well. 4,065 is the level there.
All right, joining us in our closing bell exchange right now is Amy Wu from RBC Capital Markets, Yuri Landesman from Platinum Partners, Mike Santoli from Yahoo Finance, Drew Nordlicht as well from HighTower, of course, Rick Santelli, as we mentioned. Drew Nordlicht, to you first. What's going to take place here between now and the end of the year?
Thanks, Scott. Well, we expect to see a Santa Claus rally through the end of the year when the Fed does not taper next week. Over the past 30 years, the month of December has averaged a 1.9% gain and has been positive 80% of the time. From there, we expect to see an early January rally fueled by new money allocations finding their way into equities, and then followed by an earnings-based market as companies attempt to report growth and show that the multiples of 2013 are supported. We're advising to clients to maintain a diversified balance between fixed income, equities, alternatives, and cash. U.S. markets have outperformed most other markets throughout the course of this year, and while monetary policy is expected to remain supportive over the intermediate term, we would use any downside volatility as opportunities to deploy new capital into domestic equities.
That was pretty well rehearsed. All right, Amy Wu, what about you? We look at these markets. We've just had an incredible run, as he was just saying it here in the U.S. You know, going into next year, if it's all about earnings or at least dependent on continued growth, what kind of growth are we looking at, do you think?
Well, hi, Kelly. You know, usually this time of the year as an option strategist, I'm thinking about hedges. I'm helping people protect their portfolios. We're seeing none of that demand. We're seeing none of that anxiety. The options market, too, is all about upside. We keep seeing S&P call spreads trade. We keep seeing sector upside trade. So in terms of what I can see from term structure, from the implied volatility, it still seems like all signs say clear, and we don't see a taper factored in until really the March time frame.
Uri, over to you. You know, Drew certainly seems convinced that there's going to be no tapering in December. Our Steve Leisman, who has pretty good sources, would have you believe otherwise. He's reporting today that it's more likely than not that you will see tapering at the December meeting next week. So what happens if there, in fact, is a taper? What happens to stocks?
Well, I think they get clobbered. We see a lot of volatility for next year with a possible range on the S&P anywhere from 1525 on the downside to 1975 on the upside. I think you see the downward move before the upward move. And one of the things that could trigger that, in fact, is an early tapering.
Why do stocks get clobbered on that? I mean,
exactly.
any time in the past we've seen the Fed tightening, even if there's been some volatility, you know, it certainly hasn't been the end of the rally.
Yeah, it's because people, I think, are underestimating the amount of the nearly 5-year rally we have that's directly attributable to the unprecedented liquidity that the Fed's pumped into the market. And when that safety net starts slacking and eventually gets taken away, we think people are going to take a look at these massive profits they've generated and finally say it's time to take profits, and that selling is what's going to drive the market down.
Yeah, Rick Santelli, Jack Bogle was talking to Kelly yesterday, said that he believed that the taper was already priced into both the stock and bond markets. I'm wondering what you think, Rick, as to whether any of it is priced in anywhere.
I would say no, and I hate to disagree with such an icon, but my opinion is no. As a matter of fact, our last guest, I think, has it nailed. You know, since 1979, when I first had a membership at the CME, I've been through a lot of cycles, tightening and easing. What we're going through now, due to all the crisis-type programs like QE, is different than all of them. And if you look at these charts, you see that if you go to the last Fed meeting, interest rates have moved higher, but look at the S&P 500 in that same time period. Certainly doesn't look like it's priced in to me, and I think that I am so glad you brought up that. Steve Leisman sounds convinced, and he does have good sources. Makes me a little nervous, but I don't like to have a guide walking me through what the Fed will or won't do. I like it to be apparent if everybody does their homework, which is exactly what the problem is. It's not a question of transparency. It's a question of what are they going to do next? Have they decided? How can they communicate that? Maybe Steve's part of that process, but just by looking at the markets, I don't think it is priced in, especially not in equities, and I think that the fixed income market isn't priced in. It's leading the Fed. It's ahead of the Fed.
It's amazing to see that 10-year back below 2.8% today. Michael Santoli, over to you, because what do you think? Rick was kind of indicating there's something different this time around. So when the Fed, you know, starts to tighten or taper, whatever you want to call it, that could be lights out. What do you think?
Look, there's something different about the mechanism. I don't think anybody can really pinpoint. There's been many efforts exactly how much of this equity market rally and the real calm and strength in credit markets has been because of this policy. But I do think because there is this great perception that has played a huge role, that alone could mean you have this kind of noisy adjustment period once you do get evidence of, in fact, the taper. Look, could stock prices at 1,800 at the S&P price in? Could that be compatible with a gentle and well-telegraphed taper? Sure, but I don't think the market's necessarily going to assume that's the way it goes. To me, I just see the market as being a little bit ragged here. There's going to be some supply coming out with some offerings later in the week, and small caps are lagging. So it just looks like it's kind of stalled out and resting for a while. By the way, the S&P's only up less than 2% since October 29th. It seems like we're clicking in new highs all the time, but it's really just been kind of settling back and going sideways.
What about the idea, Mike, of this end of crisis trade that we've been talking about so often today on CNBC? And you can almost pick, whether it's the government finally getting completely out of General Motors, whether it's the fact that we think a budget deal could be somewhat imminent, that Europe is stabilizing, that stocks are near all-time highs, and the taper is coming soon, whether we like it or not. So what about this idea that the end of the crisis trade is about to take hold?
The end of the crisis trade is the S&P up 30% year to date. It happened. That was the end of crisis trade. And now we're sort of recognizing it. We're acknowledging it. I did a piece like in October of 2012 trying to timidly suggest the uncertainty era was coming to an end. And kind of nobody really, it didn't seem obvious at the time. I feel like at this point, gold crashed. Everything has kind of fallen into place. That's why you need an earnings second wind in 2014, I think, to support what the market has given you this year.
Amy, one of the moves we've seen, it's interesting as these cross currents, we try to figure out whether volatility is going to settle back into maybe that, year-long low that we saw prior to the last week or so. What do you think happens here with the VIX? If volatility in stocks, you look out into next year, I mean, it's picked up a little bit, but a lot?
Yeah, I mean, as an option strategist, I would love the entire volatility regime to price from where it is right now. I think as the Bernanke put / Yellen put kind of lops the tail off the model and we reprice, we will just generally be in a higher volatility regime, but I don't think that happens for a while if we're looking at first quarter as the first time that we time the taper. The other thing is, I was just in Europe for 10 days visiting clients. Everyone is so bullish on the U.S. I just see so many incremental buyers coming in. If we do get a correction, that I don't know that volatility has that much room, unfortunately.
All right, thanks to all of you. Amy Wu, Mike Santoli, Yuri Landesman, Drew, and our own Rick Santelli. Well, stocks are cooling off today, but it is nothing compared to the cold and wintry weather slamming the East Coast today.
Yeah, it's not that cold, but it's definitely snowy, and we're feeling it at the CNBC.